What's up, dudes? Welcome back to the channel. Today I've got a mess on the whiteboard. It's not the best handwriting, but it's what we got to work with. This is what we're doing today. This is my oil play. If you've been watching the Instagram right here, I've been posting about this for over a month. You know this. Some YouTube videos have been mentioned on my favorite down here, LUKOIL. I'll show you the numbers, but I want to pitch you really what I like about this. Now, my framework, energy is going up. Supply is shrinking. The global elite have a book out. It's called The Fourth Industrial Revolution. I'm reading it. It's by Klaus Schwab and the World Economic Forum. These people are an interesting group. When I was in college, I was mandated to read Agenda 21, and this was in 2010. And I thought it was kind of funny and laughable, and it was sponsored by the World Economic Forum. And I made a mistake. I should take them at their word. They're pretty much right on. Nonetheless, they've got this idea that global energy, carbon bad. Okay, carbon bad. And so we're going to use carbon for at least the next 10 years, probably, until we all can move to electric cars and nuclear, solar, or whatever. But I'm interested in getting out of caring about my carbon demand. And here's how I approach this. Exxon has been my play now for about 2 years. I looked at Exxon when it went negative. Oil went negative in March 2020. And I bought Exxon like $34 a share or somewhere around there. And it was paying like a 10% dividend at the time. So I buy these things looking at a cash flow. Exxon currently is $78. That is, earnings per share is $5. And the price to earnings is 14.6, which is a good starting point because Exxon is the number 4th largest oil company in the world. And so the dividend there is 4.5%, which is $3.60. The way that I approach this is every gallon of fuel that I consume, I need to own a share of Exxon to not care anymore. Because if the price of oil goes up, presumably it'll lag, but presumably my dividend will go up maybe a year behind it. It should go up in terms of percentages, as terms of cash. Maybe the stock will rise and go up and down in price. I don't care. I'm not selling the stock. I'm holding this until we get through what I refer to as the fourth turning, which is an amazing book. Link below. If you guys buy any of those books, I think it helps the channel a couple cents or whatever. But more or less, it helps you get this mental framework. And I'm working off this fourth turning framework, and it's facilitating why I like this. Just to compare, we look at Shell, $53 a share. The price to earnings ratio, it's earning $5 a share. So at this current price, it's got a 10. So it's $5 a share is what it's earning, and it's selling at $50. Market cap, which is interesting. On Exxon was $333 billion. Shell is $203 billion. That's important because these are apples to apples. They're good comparisons. And we've got a dividend of 3%, and it's paying us $1.61. So we would need to own more than $53 of oil to not care about the price of oil, in my mind. This is why I'm buying this, for the cash flow, so that the stuff that goes through my vehicles, I can zero out, essentially. So somewhere between, and we can compare these, this one actually has more earnings per share than Exxon, and it's making about the same dollars per share than Exxon. So price for price, as far as value goes, Shell is a little bit cheaper based on today's prices. Now the market is irrational. So maybe tomorrow Exxon has a scary news story and it drops to $60 and these numbers change. But right now today, if I was going to buy one of these two, I would probably favor Shell. The downside is they won't give you as much for your money. They're going to give you a smaller dividend. Here they're giving you 4.5% on your money. Here they're going to give you 3% on your money. Moving down to BP, a little bit different. It's got a market cap of $95 billion, half the size of Shell, 1/3 the size of Exxon. 1, 2, 3. It's got a dividend of 4.2%, very much in line with Exxon. It's got an earnings per share of $2, which is a PE ratio of 13, very much in line with Exxon. And it's going to pay you $1.27 for owning a share. So which one do I favor? I probably favor Shell, but if I was going to look at these things, let me make sure you guys can see that. All right. So if I was going to look at these things, these would be the ones that I would compare in. Exxon, I think, would be the least risky. Now, you know that I am about LUKOIL, which is a Russian oil company. Russia is the second largest producer of oil in the entire world, and Luk is one of their largest energy producers over there. Not the largest, but one of their largest. My buddy was just in Spain, was actually over there. He's got family there. He's living there for the last month and a half, 2 months. Brought his dog and everything. That's how long he's been over in Spain. And he's like, Trav, LUKOIL is everywhere. it's just everywhere. And I'm like, okay, they serve a ton of Europe. And so today, and you guys know on this channel, I started talking about Luke right after it dipped to below 100 because I was looking at the dividend. And let me show you guys, we're going to zoom it down just a little bit. The dividend here on LUKOIL was $7.35. So at $100, it became like a 7% dividend. So compared to Exxon, I was all about it. What happened is I bought some at 70. I was super ecstatic when it went to $70. Then it dropped to $50. I have dollar cost averaged down. Then this morning I wake up and the thing is at $20, which takes it from a market cap of almost 100 billion when I started looking at it. Then it went to 80 billion. I got excited about it. Now it's 16 billion and the whole world is melting and all of a sudden the value of their assets must be 5 times less, even though oil is up 5% today. So either the market is irrational and undervaluing Luke, or I'm an idiot. And so I hope that I'm an idiot and that Luke goes to $5 because I'd like to buy it. Nonetheless, not guaranteed that they're going to pay a dividend this quarter because of crisis. That's why we're getting this for cheap. But this gives us a PE ratio of 2, earnings per share of 9, a dividend of 7, which means it's a sustainable dividend. They might lower this. They probably will. They don't have to pay. And what they were paying, based on the close price on Friday, was a 14% dividend. I mean, it was 3 times cheaper than Exxon. But today, based on the previous dividend, not saying that they're going to pay the whole dividend this month, it's been a hard quarter. But it's 36% of my capital, which means, essentially, I can give them a $20 bill, and they will give me $7 or so, or 2 gallons of fuel. And I probably will buy the fuel from Exxon or Shell because Luke doesn't have any stations in where I reside at the moment. But nonetheless, it's an opportunity where for every $20 bill, essentially like every 24 pack, if you will give me 2 gallons of fuel. And so today, I've been buying the crap out of it. And tomorrow, if it stays this price, I'm going to buy the crap out of it. And the FUD, fear, indecision, doubt around it is we might sanction them. We might sanction Russia. We might de-dollarize them. We might kick them out of the SWIFT system. We might do all these bad things to Russia, except actually sending troops and doing something about it. Nonetheless, market's discounting this for me. It's a little bit of a risk. If you're not a crypto guy and you're not used to 50% volatility, I mean, literally went to bed this weekend, it was $50. I bought some at like $36. I'm like, yeah, man, things are good. Wake up this morning and the market's screaming at me, you're an idiot, it's $20. I bought more. Because at $50, I was ecstatic with a 14% dividend. At $20, I'm just tickled on a 36% dividend. But yet, oil went up 5% today. So the value of these assets and the wells and all the things that they own has actually appreciated in value. And their regime, if you will, is taking additional land. So they actually have possibly more oil than they had previous because now they're taking neighbors' land, right? Like, maybe. We don't know how all this is going to work. On Friday, they announced a deal in Mexico with one of the largest oil wells in Mexico, which actually might serve the state of Florida. We'll see how that works. But nonetheless, LUKOIL, it's a crisis play. Not saying it's a guarantee, it comes with risk. But it is literally like 5 times cheaper. 7 times cheaper. Apples for apples than Exxon. I'll wrap with this. You could buy Luke at $20. I will buy Luke at $20. I have been buying Luke at $20. I actually bought some at 19. Bought others this morning at 25. I was happy on both of them. Nonetheless, if it returns to its Friday close, and I'm like, whoa, things are really crazy over here, I don't want to be part of this whole thing, I could sell half my bag, buying it at 20, and it returning to 50, and be beyond the point of no concern. I don't care what happens after that, because my initial capital I put in has been taken out. And now I'm holding these shares, which will presumably give me 2 gallons of fuel per share for free. But only a month and a half ago, it was $100 to buy the same exact company. I'm actually doing the exact same thing with a Russian bank, which is getting hit way harder. And that one's a super spec because who knows, they actually might financially sanction them. But nonetheless, Russian oil, I'm buying the crap out of it, getting out of the system entirely. Between Exxon, Shell, BP, and Luke, I am figuring out how much oil do I need to own so that as we move into the 4th industrial revolution, I don't have to care what the cost of energy is. It can go up, it can go down. I don't really care because I have bought into my oil supply. And so now I own my oil supply. My political elites could do all sorts of things. They could close my ability to buy this. They could force me to say, they could do all sorts of things. But that's the opportunity. So thank you for watching. Thank you for sharing these videos with somebody who might need to hear it. And if you're just beginning, one share. What platforms do you use? Any of them. Robinhood's not my favorite, but I use it. You can use E-Trade, you can use Ameritrade, you can use all these things. But essentially you can buy these things for almost no cost, meaning there's no trading costs, and you can start with one share. And you can start next week with a second share. And you can start the process. Same thing with metals, silver, gold, cryptos, copper. I put it on this channel before. You can literally go through your change and find a real copper penny, 1982 or older, and that thing's worth 2 pennies in copper value. And you can pocket it. I actually pocket it. I got a whole jar full of them. And then you can take $2 and go down to your coin store, and you can get 1 silver dime, 1963 or older. You get 1 silver dime, and that's approximately a little less than 1/10 of an ounce of silver, and you can actually own that. Even if you're starting at zero, you got nothing, you're in debt up to your eye, the whole thing. You can start the process of building real wealth. Oil is a nice additive. It keeps you somewhat in the financial system. Yes, they can block your trading accounts and they can do all sorts of nasty things to you. Silver, it's harder for them to do that. Crypto, harder for them to do that. But this is a great way to play it where you own the asset and you no longer care what the price of energy is. In fact, it's good for you, actually. Peace.